Well, some investors may be seeing signs of an economic recovery after last week's stronger than expected employment report. Our next guest says it's probably too early, though, to start changing your strategy. He's Peter Boockvar, equity strategist at Miller Tabak. Peter, good to have you back on the program. It's been a while.
Thanks for having me, Betty.
Okay, Peter, in fact, a couple of strategists have already, since Friday, upgraded their forecast and actually upgraded their outlook for the economy. Have you done that, and why not?
Well, the government numbers are tough to predict, and they're subject to major revisions. And I know everyone gets excited over these first Fridays of the month payroll numbers, but just look at the prior 2 months, they were revised upwards by over 100,000. So I need to see more than just one data point to convince me, because I've seen other data that doesn't confirm an immediate improvement in the labor market. There's no question, though, the number is encouraging. It's in the right direction. But the question now is whether, again, is it an anomaly or is it the harbinger of a sea change in the economy, and whether it's sustainable? Yeah. And then, of course, what that means for stocks.
An anomaly. I mean, I'm reading some of the research reports out this morning. I mean, some people are calling it some of the conspiracy theorists out there saying that the BLS is really manipulating these numbers. But aside from all of that, you just mentioned something very interesting, which is you need to see other pieces of data to support this, and we haven't gotten those other pieces of data, right? Retail sales are still doing dismally. We saw the service economy contract. So what is it that needs to tell you that this data is actually true?
Well, there's no question that based on the jobless claims data, we've seen a reduction in the pace of firings. That is definitely a bright spot and has been. The question is how long is the bridge from the decline in firings to a big pickup in hirings? That is the question. Friday's number doesn't necessarily answer that. It confirms the jobless claims data. So we need to see where that goes. We still need to generate more than 150,000 jobs a month to see a decline in the unemployment rate. But we need to see companies having confidence to start picking up their pace of hiring. And again, we have not seen that yet. All we've seen is this big reduction in the pace of firings.
Okay, so aside from that then, I mean, that's an overhang there for the economy, but also the market. But what's the big overhang for you right now in this market?
Well, the question for stocks is that after this enormous rally since March, where the speed and distance is the greatest since the 1930s, is Friday's number an impetus to continue this rally in stocks, or is something else changed? But we have to remember, a part of this rally, not only just an improvement in the economy, but it's been the drug of easy money. It's been the weak dollar in igniting asset inflation. Well, Friday, there's no question that the strength in the dollar reversed the reflation trade and tempered the entire rally in the stock market. And today, the futures are down. Yeah. Asian markets were mixed. European markets are giving some of that back. So a bounce in the dollar, the prospect of higher interest rates, the prospect of a sooner rather than later Fed rate hike is enough to temper any enthusiasm that Friday's jobs number engendered from a stock market perspective.
Yeah, it does sound like it's going to take a lot more than that to get over that overhang. Peter, good to have you with us and to talk to us about this. Peter Boockvar of Miller Tabak.